Morning, guys. Welcome back. The markets are grinding lower. They gap down and they're kind of grinding lower. So I just want to put out a video. Again, still short. Still looking for a failure of this bear rally, and that's really the angle that I'm playing right now. Until that changes and gives me a little more proof that we're actually in a new bull market, it's sell the rips all the way. So Qs. Let's look at that. So we've got. My levels have gotten a little out of hand, so I'm gonna have to probably rechart this a little bit. But for now, I'm gonna have to say, right there, this level, right? I don't like that one too much. It might hold, but what I think is probably the level is this 204. Yeah, it's about 204. Oh, actually, it's right down here, 203. 203. We'll just call it 203. And that's right here. That's your decade-long bull market. If you roll out, here's your decade-long bull market uptrend. And as we roll out, we overshot it on the weekly, but the week's not over. So that would be an area that if we fail and the bulls are not able to hold 203, then that is a false breakout, and that major trend line did not hold. So that's the area I'm watching. I think we're going to probably come down and test it today. If not today, tomorrow. Or we potentially gap down below it one of these days with the rest of the week. But I think it looks like today we'll probably come down and test it. So that's where that's heading, or at least I think that's heading. XLV setting up in a nice bearish rising wedge. Look at this. I moved my trend line. This one down here, I originally had it like that, I believe, and I was looking at this as a breakdown, and then we were going to back test. But then when we gapped up, I adjusted it. I think this fits cleaner. So not quite there. My line was a little bit off, but this is what I see now. Here's your bearish rising wedge. So looking for a breakdown here, and that would be a sell signal on XLV. Excuse me. It's early. I haven't had my coffee yet. And so that's what I'm looking for there, a breakdown XLV. This is an hourly chart. Go ahead and mark it out. I think that looks good. I'll probably take that one. Apple's interesting as well. Look at this. So the black line, what's interesting is the black line. Roll it out to a weekly chart. Here's your decade-long bull market going back to 2009 in Apple. And you can see if I roll it back into the hourly chart, this is the little things like this is what you need to be able to read or understand a chart is telling you. So you see here we broke above that, and then we gapped down and failed, and we're below it. So I suspect this holds as resistance, and we roll over and fail. So I like to see that. This is very telling that there will be a failure here in Apple because we moved higher, closed above it. So at this point in time, yesterday's close, we were above resistance, a nice solid close above resistance, and everything looked bullish at the close. That's how they do it. They like to close things looking bullish, and then put the fake you out, usually with a gap. So it's a trap. You have no chance to get out. So without losing money, basically, they're trying to trap your losses. And that's how they do it. They'll close you bullish right above support, just barely, not huge, and then they'll gap down. But I bet your tell was probably volume. Yeah, see the volume wasn't horrible. I mean, there was some volume yesterday. So I think what you have to, you need to be able to understand the general picture, and then understand, okay, we barely closed above. Usually a breakout, you want to see a big mass of volume, and you want to see nice impulsive price movement breaking higher. And this kind of just didn't have that, that firepower beneath it. It just kind of trickled higher, and then today we gap lower. So I think that's your bull trap right there. That's what that looks like. It's not a huge bull trap, but the gap lower, I think we probably sell off, and this resistance holds. It could chop around a little bit more, but I think we're going to hold, and Apple sells off here. All right, moving on. Just trying to find the interesting stocks that that are setting up. XOM, here's your bearish rising wedge. We broke that, traded sideways, and now we're gapping down. So looks like oil's going lower, and or at least the major refiners. And oil, I think, is actually moving lower as well today. I just don't see. I don't see the market doing well without oil holding up. There's just oil has too much involvement in the stock market. So I don't know. This is bearish. I think we head lower and probably going to head down to see if I can find a nice clean level. I guess down here is probably the level, somewhere down right about there, $36. So we'll watch that, but I think that's where that's probably heading. I covered this one, took a small loss on Walmart. I didn't like the price action here. And here's what I didn't like about it. Yes, it is in a large bearish rising wedge, and this is most likely a fake out move. But in the short term, I didn't like the fact that we ran up and broke. This is a daily chart. We broke above the bearish rising wedge here, failed, came down, ran up, did it again, and failed again, and then ran up and broke even higher. I don't like this price action. Usually, if you're going to fail once, that's usually the move, and that was actually a good sell-off. And if you come up and you hit it again and fail twice, you really have no business being above that, after you've failed twice. It rejected twice. The buyers are still too strong, and so I just I covered that for a small loss. We don't win them all, so it's it's a numbers game. You gotta look for the setups and play the ones you find and cut the ones that don't make sense short, and so that's what I did there. So Costco, this one I'm actually still this one I did short. It's a lot like Walmart, but I decided to short this one, see what happens here. We broke higher, we're breaking down, so if it breaks down here and starts to sell off, then that's good. If it starts to move higher, we'll just cut that one as well. If it wants to behave like Walmart did, then we'll cut it short. I don't have a large position in it, so MGM casino stocks, yeah, they look like they're topping out. This is, in fact, could be setting up for like a bearish rising wedge. Yep, there you go. See, a reaction there, reaction there, reaction there, and reaction there. And then on the bottom side, you've got, we'll call it there, right about there. Reaction, reaction, reaction. So bearish rising wedge, and I think we break down. So just waiting for that impulsive break. Now, one thing we could see is a nice break higher. Like, you see this a lot when you have a bearish rising wedge because it's such a bearish pattern, and it sets up and everybody looks at it and they're looking for the breakdown. Sometimes what you'll see is this big old gap higher or break higher, followed by a big old nasty red impulsive candle. So we could break higher. That's usually your fake out move. And then if that's followed by selling, then that's your tell that this bearish rising wedge pattern is going to play out. It just had the fake out move first. Again, these are people that are trading, so it's institutions. They're trying to trick you. One person makes money, the other person loses money. So if a lot of traders are looking at the bearish rising wedge, someone might come in and smash it higher, get everybody to stop out, fake everybody out who was bearish, and then they go short and take it and make all the money. So that's something to watch for, and that's something to watch for in every bearish rising wedge. Moving on, LQD, this corporate bonds, they're selling off. The Fed is in here buying, but it looks like they've probably tapered off a little bit. They were, they pumped trillions of dollars into this. Well, I don't know exactly how much, but they pumped a lot of money into this to get this to kind of V bottom. And now that it's up here and stabilized, they're probably going to back off. I can't see them just continuing to pump money to push it higher. They're probably just going to back off. It looks like that's what they're doing. This thing's kind of starting to taper off. So I suspect you're going to have some sellers come in. This is probably going to drift lower. That's how it'll probably react. Markets can move lower, and the Fed isn't concerned about keeping things propped up. They just don't want things breaking and crashing. So a break like this, that causes a lot of problems with the financial system. And so they prop it back up, and now they can let it drift lower and continue to pump money in, but doesn't mean that they're going to pump enough money in to keep the prices up. It could just drift lower, and markets can drift lower without causing problems because that gives people time to reposition. So that gives hedge funds and pension funds opportunities to reposition out of these ahead of any kind of major losses, and that is most likely what's going to happen here. So I don't know what's going on here with Tesla. This thing's pretty interesting. I mean, to me this just seems like a short. I can't imagine fundamentally why Tesla would be moving, too much higher. I can see this, this to me looks like the typical bull or kind of bubble, I guess, reaction. You'll have you have the ramp up period, and then you have this big sell off, and then you have the thank goodness it's over period. Here's an example just to pull it up. You got this, which is kind of the greed period. This is the where all the public's participating, and you saw this with Tesla. It was one of the number one holdings of Robinhood back when it was ramping higher, that and like Virgin Galactic. So just the public. I mean, I heard about people buying Tesla at the gym and stuff. The public was buying this, and then you have the sell off, and then you have what's called the bull trap. So you have the big sell off, and then you have the return to normal phase, and then you get the crash, I guess, of that bubble, and that's what that looks like to me. I mean, doesn't necessarily have to be that, but you've got the ramp up period, you've got this little sell off, you've got the return to normal, and then I think you get the big crash. So I don't know if that's true, but to me this does look like a good short, and I might actually take a little bit here. Let's look at levels on this. I mean, I got this level marked out, this 733. So I think that's probably your near-term level, your near-term support. We break that, then we're going to probably gap fill, and that gap fill is right here. Mark that out, and that's a level. You can see lots of reactions around that gap. So we break 733. We probably gap fill down to 651. And we break 651. We're going to head down to right there. Some of these levels might not have reactions, but I'm just trying to mark out the ones that seem relevant. 540, and yeah, we'll just leave it at that for now, just to watch this. But this is something is an interesting short. Tesla can be a wild card. It can move up even though everything else is moving down. However, I just don't see Tesla selling a bunch of expensive electric vehicles with no tax subsidies in a fundamentally flawed economy right now. I mean, Ford is taking a massive hit, and I just don't see Tesla doing any better. So to me, that means that's a good shorting opportunity. All right, guys, and let's look at gold. Gold is performing as it's expected recently. So that's something to take notice of. Is the market has been gold's holding strength, I guess, is what I have to say. So right now, here's your gold bullion, and I've got this upward price channel, and we just continue to hold that channel. So again, just treat it bullish. Actually, this looks like it goes all the way down to here. It does. And just treat it bullish until that changes. Maybe there's a bearish rising wedge starting to form, and you would expect to see that eventually. Eventually, you're going to start to get some sort of bearish pattern. Gold has to have pullbacks in a bull market, but as long as it keeps the major pattern of higher lows and higher highs, then it's in a bull trend, and we're going to continue to move higher. So that's how I'm continuing to trade that. Here's Barrick. It's just, what's it doing today? Down a little bit, but it had about almost a 20% run in the last couple days. I think from here, down here to here, 21%. Just in a few days. So you'd expect to see some sort of a pullback. Probably going to pull back down to this 21 area, this trend line. That's its support line right now. So probably need to come down and tag that before moving higher. You know, when stocks just ramp higher and go parabolic, they're usually followed by a big sell-off move. So if something's in a bull market, you don't usually want to see just a parabolic move. That's like a bubble. You see that towards the end of a bull market often. You'll see the bubble phase. But when it's in a bull market and just building, it will just continue to grind higher. It will, you know, come back and tag support and run higher. It will just build on gains over time, not all at once. So that's just how, you know, it takes time. And, you know, in a bull market, that's why I prefer to short, because you can usually get your money a lot faster. Whereas a bull market, you got to take a position and you have to just let it sit there. And it builds over time. So I did take profit in AEM and Agnico Eagle. Again, I bought this thing on this dip down here. I didn't get it at the very low. I think I got it right about here at 37 bucks. But you know, I had my trend lines marked out, and I took profit when we hit this 53 level yesterday. So that's you know, roughly a 47% gain on that trade, and so not bad there. And again, I had mentioned in several videos I wanted to sell this one and lighten up a little bit of my gold position. Even though gold's in a bull market, this stock is just, you know, it trades more sideways, it looks like. And so here's kind of how this one's been trading since 2015. So yeah, still in a bull market. You know, as you can see, we have a low, we have a higher low, and an equal low. This, you know, basically an equal low. Here's a high and then a slightly higher high. It's just not uptrending as nicely and cleanly as something like Barrick. So and I have a really large position in Barrick, so wanted to take some profit on a winner, and 47% gainer is what something I consider a winner, especially since, you know, it happened in just a period of a couple weeks. So not bad at all. Let's look at Microsoft real quick, and then I'll cover Amazon. Amazon's been ramping higher. Here's Microsoft. Here's your resistance line, 174.52, and we have a small gap. This is your island reversal top, right? Or island cluster reversal top. And it's basically just a cluster of candles that separated by two gaps. So here's your first gap, here's your second gap. That creates the island. And these are reversal patterns. So usually when you see this at a tie, then that signifies a reversal, and that's exactly what we got. You know, it made that island reversal cluster up here, and then we reversed and had a nice big sell-off. So that pattern has played out. You know, and from the reversal, I mean, if you would have taken that, it's a 23% drop, and now we're running right up into what is pretty much resistance, and that's because this island reversal, this big gap right here that was created. It's not that big of a gap, but it is a gap. And so Microsoft ran up, almost touched the bottom of the gap, and then we're moving lower. So I think we're probably done in the rally in Microsoft. Again, I'm treating this as a bear market rally, so that's my assumption, is that the bear market rally is over, and I think we start to head lower now. But we'll have to watch this. As of right now, the price action looks confirming that this was the top, with the gap down right here. But I want to see a lot, you know, a big red impulsive candle, a big sell-off candle would really help confirm this bear market rally thesis. Something on the lines of either a big gap down or just a big candle on the daily chart. You know, something like one of these right here. You know, just something to really put, you know, confirming bearish action into the charts would really help. We don't have that yet, so until we get that, we just have to continue to watch it and stay light on our feet. So that's it for the video, guys. Let me know if there's any charts you guys want me to analyze, and I'll catch you guys on the next one. Bye.